What's going on, guys? I got another video for you guys today, and today I want to talk about bearish patterns, what you guys can do if you miss the move, but most importantly how I came up with the CCL or this ticker specifically, and why was I watching it. Okay, so obviously here's the daily chart on CCL. We can see that we had support here at this 1935 area. Why? Because we had this little candle here, we had these wicks that were acting up as support at this level. Now, once that level broke, we saw this increase in volume here. Look at this spike in volume at the break of that level yesterday. So the idea and the game plan was the next big support on CCL is going to be at this level of 1784. So the game plan today was if 1886 breaks, which is yesterday's low, we're looking for continuation down because the next big support is at 1784. Okay, now let's take a look at what happened intraday. So intraday, I was watching this one, it was coming in right to my trigger point here. However, I missed my entry to go short, buy puts right here to take advantage of this massive sell down. This would have gave me a nice quick trade and I would have been able to get out of the trade. However, I missed this initial move down. You can see right here, I missed that entire move down, but I didn't chase this move, guys. I waited for a retest and a pattern. So this retest came up and we can see it's putting in a rising wedge. Now, what's a rising wedge? We've talked about this before. You get that aggressive sell-off, this wedge coming into a resistance or moving average, and then price action just rolls over again, okay? So that's exactly what we got. We have the rising wedge. We have volume decreasing on this move up, which tells us divergence, and we have a pattern coming into resistance. And also, we have something else to confirm this. When you guys combine everything together, you get that conviction to take the trade. Take a look at what happens here. It's very interesting, actually. Right here at around 945, right here, right into this resistance point, you start seeing this bearish activity coming in. They started really just pouring it in here. And, they're expecting a bearish move down. Whether they're selling calls or buying puts, they're expecting a move down, and that's exactly what happened here. You can see most of the day it's been pretty bearish, and the 18 puts are actually leading the way in the top chains today on CCL. All right, so that was exactly why I got involved on these puts. We got them at around 50 cents. They ended up hitting at around 95, 96 cents. A significant move, pretty quick drop, especially when we're buying. When the price is moving up, our premiums are going to be a lot cheaper. So we got into puts for tomorrow's expiry at 50 cents, took advantage of this move down here. But again, everything lined up perfectly. You had the break that if you missed, great, you wait for another entry. We got our rising wedge. We had our decreasing volume on increasing price action, which tells us divergence. We have resistance being retested again. We have moving averages, and we have the flow on our side confirming that they're expecting a move down. You get involved with stops at around the high of day or high of pre-market levels. You give yourself the opportunity to make great risk to reward. And that was exactly what happened. Nice, easy trade, and we were out with a bang. Hopefully you guys enjoyed this video. If you did, go ahead and like and retweet and share this with somebody, and make sure you guys spread the word. Thank you for watching, and we'll catch you on the next one.